Mike, let's have a general conversation. A lot of times we talk about specifics. We talk numbers, and it can be confusing, especially for radio listeners, because we know most people are mobile. But, what's going on What in the rate department, do you think? Are we going to see some rises in rates? And if we do, when and how? And what's it matter? And what does it mean? And
yeah, it's extremely hard to predict. The Federal Reserve, of course, has a lot to do with what happens in interest rates, as does the overall health of the U.S. economy and the world economy.
Of course.
So what we're seeing right now is actually some decrease and some stability in these low interest rates. So, right now you can have a 30-year fixed-rate mortgage, some variance depending on whether you're doing a FHA, VA, or conventional loan, but typically somewhere around 3.5% on a 30-year fix.
See, that's just crazy to me.
It's insane.
My first mortgage when I was young was 11.5%. Was and a couple years before that, in the good old days of Jimmy Carter, home mortgage were 17%.
Yeah.
And even then, people still bought and sold real estate.
Right.
I mean, you still, real estate, and Alfonso, again, back me up here, because real estate is around a life-changing event, right? You're getting bigger, getting smaller, you're getting married, you're getting divorced, you're having kids, your kids are moving out. There's a reason why behind almost every real estate transaction we have, right? So today, interest rates generally are around 3.5%. And, of course, we can't tell you what your rate is because we don't know you. We don't know your credit scores. We don't know your cash position. We don't know anything. But in general, you're looking at about a 3.5%.
That's right.
Interest rate. And nobody knows where that's going. Nobody could ever know.
That's right.
But what do you think? I mean, are we going to see this? Are we going to see it start climbing? It's just been low for so long.
Well, there's a number. There are a number of experts who are predicting that at some point here in the near future, we're going to have to see an increase in rates. However, they've been saying that now for well over a year.
Yeah, we keep thinking, it can't go any lower. And I
that's
refinanced you refinanced my house for me.
And I'd love to do it again.
6 months ago, and you said it's not going lower, and now it's lower. And I'm kind of pissed about that, actually.
I can save you more money. You'd be happy about that.
Let's do it again.
Mike. So,
nice.
Nobody really knows. All you can do is capitalize on the opportunity in front of you. Whether you're buying, refinancing, whatever you're doing, capitalize on the opportunity in front of you. Because these low rates aren't going to be here for long. The affordability of houses is tremendous right now. So take advantage of it, especially with the low down payment programs and all that stuff. Now is the time.
Everything.
Timing is everything. But you're saying capitalize. If you're not in the market to buy or sell a house, but you own a house, man, I mean, if you're paying more than 4.25% or 4.5% for your money, call. I mean,
and if you happen to have a 15 or a 20-year loan or a 10-year loan, you can do those loans right now for in the twos. The 2.75, 2.
Seriously,
yes.
That's crazy.
That's unbelievable. It's
so
free
call
money.
Me if you have any questions about that. 314-503-6024.
So not only that, but. So let's say that you do. Let's go with the 3.5, the big number in today's market, right? It's 3.5, and good old U.S. of A. We still get to deduct that mortgage interest on our taxes. Which, by the way, folks, there's a question as to whether that's a permanent situation. Many industrialized countries they don't have that. So if you hold that as near and dear to your heart as I do, write your congressman because we want to keep that. But so after, let's say you're in a 30% tax bracket.
Yeah, that's going to cost you. That's going to cost you about 2.5%.
It's crazy
after tax.
It's just crazy. I
mean, no money available in the world today is cheaper than your mortgage.
I'm gonna start a big fight. I'm gonna tell everybody to go and refinance your house at the absolute maximum you can get, and take that money. That's sitting someplace earning whatever.
And reinvest it.
I mean, it's almost free money that obviously don't be stupid about it. Don't take the money out of your house and buy a TV.
Typically, you can go up to 80% of your appraised value if you want to do cash out.
Yeah, it's just an amazing story. And rates just don't seem to be, they haven't changed. They haven't gone up for
We've had periods
years.
of fluctuation, and they've come back down. We've had short spikes for maybe a month or so, and they've come back down each time. So it's a great opportunity.
And so now, we're talking to folks about harvesting equity in their house. We started talking about interest rates. Now we're talking about harvesting equity. But we can also take that back to the market itself, low inventory. We're going to talk about market statistics first quarter this year, first quarter last year pretty soon. But now we're looking at, where the housing market is going. And I think in general, we're going to start to see a more consistent across the board increase in values, right?
I think we've seen some increase already for sure.
Right, which is, great for sellers because they're getting back if they've been underwater. I think mostly we're done with that now. But, the affordability of housing today is unbelievable. It's historic low. Low pricing and low interest rates equals
perfect storm.
It's
perfect storm to buy.
Yeah, it really is. And, if you're a move-up buyer, a move-up seller, now's the time. I mean, strike while that's hot, because if prices go up about 4%, which is our historic norm, right? If you look at a 100-year curve of St. Louis real estate, residential property, you're going to see about a 4% overall curve, right? So prices go up 4% and interest rates go up 1% on a $250,000 mortgage.
Yep.
You're going to see, what is that, an extra $60, $75 a month just to, for market conditions.
Waiting generally does not pay. Because, again, take advantage of the opportunity before you. And if your situation improves, if interest rates go down or go lower or go back down, if you bought when they were higher, you can capitalize on the opportunity at that time.
And Alfonso, you work with lots of buyers. I mean, do you feel like people are waiting? I don't get the feeling like they're waiting. I think the problem is they can't find something to buy.
Oh, it's definitely the problem. Inventory is so low that if they even hesitate, they're going to miss the house. And, a lot of them are turned off by competitive bidding. It's anxiety.
Right.
So just finding the homes is really tough. And so, we're just trying to convince our buyers, timing's everything. If you see the house you like, jump on it. Yeah, you might have to bid a little bit over asking price. We try not to let them get crazy.
Yeah, I mean, don't go nuts with it. But if it's a couple $1,000 on 300,
especially what we just talked about, prices are still where we were at 2003, 2004. Interest rates are low. It's the perfect time to buy. It's really a smart decision to move quickly and take advantage.
Right. So there's just a lot of stuff going on in the marketplace and in the mortgage industry. Refinancing, Mike, is that obviously somebody would just call you and give their basic information. Within 5 or 10 minutes, you'd have a pretty good idea.
Absolutely.
How complicated is that? I mean, it's increasingly complicated on the mortgage side of a purchase transaction because the underwriting is growing in complexity.
Yeah, so the refinance is a little more simplistic because obviously you've already been living in the house, you've been making the payments, so all that information is there on your credit report. We have a rough idea of what you've paid for the house, and of course we're going to do an appraisal in most cases, not all cases, but in most cases, and make sure the value is there.
Right.
So it's really not. I mean, yes, you have to provide new paperwork. Pay stubs, bank statements, possibly W-2s and tax returns, stuff like that.
Is it easier if people refinance? Does it matter, I should say, if people refinance with their current mortgage holder versus a new mortgage holder? Is there if someone is with a national bank, is it going to be any more?
No, it's not going to be any more or less complicated necessarily, although a lot of those national banks are so bureaucratic, getting it done in a timely fashion is very,
Mike,
very
you be
difficult.
Nice to those, those bureaucracies.
It's just, it could be very difficult and take a long time. And the longer it takes, the more risk there would be that your rate could change, go up, expire, whatever. So typically we're going to be able to match or beat whatever one of those banks is offering anyway.
And if someone is thinking about, obviously you can't have your house on the market and refinance. So, that's two
right.
different
You'd have
things.
to take it off the market.
What sort of time frame are, you get a call today. Someone's calling you right now at 314-503-6024.
Thank you.
And they say, Mike, I can't believe it. I'm still paying, 5.5%. I thought that was crazy low, and now it's crazy high. How long does it take? Really?
30, 45 days.
Yeah, that's
Refinance
awesome.
your house.
That's awesome.